This theory is rooted because I get a lot of messages that look something like this. As you can see here, it says, I would love to enroll in your course, but I don't have the $300. I have a trading account right now with about $100. If you please help me get it to $300, I would definitely withdraw and enroll in your course. I'm not done. I know you're probably cringing a little bit. I'm not done. I also get to see P&L like this through my experience as an educator teaching people over the last 4 years. As you can see, this is a $1,000 account that took a couple losses and had one big winner there on Euro AUD with a larger lot size than the rest of the trades, and it ended up making him profitable. And he was bragging to me about this, that he was up 30%, when in reality, we don't even know. He probably risked half his account to take that position. So these types of messages, these types of P&L that I've seen over the years, can be strung together by identifying these bad habits that the traders share. And it starts with the fact that most of them, I would say 99 out of 100 of these traders that start with a small account, and I was one of them. I'm not going to be super hypocritical here. I did start with small accounts and I continued to blow them. So I know these habits are true from personal experience and from teaching people. But like I said, it's rooted, number one, in the fact that they're focused on the money, not percentages. You're very quick to say, look, I made $300 today, not I made 3% today. You're very focused on the money when you first come into trading, and that's a big distraction. It leads you to force trades, which means you're going to trade even though you probably shouldn't. Maybe you're not grading the setup. Maybe you're just gambling. Maybe I'm going to just call a top here. You're forcing trades, right? That ties into that other point there. You see over trading where you chase after trades after you think it's going to go up and it starts to move up, and then you get in late because you don't want to miss the move even though it already happened, right? So both forcing trades and over trading are two things that really do get pulled out of you and pulled to the surface when you trade with a small account. Using a small account also is going to allow you to strategy bounce, which is like an instant shot in the foot as far as trying to build your trading career, because you're never going to get to see the consistency behind one system, right? So you don't want to strategy bounce. You don't want to force your trades. You don't want to overtrade. You don't want to do anything like that. And especially out of all of this, you don't want to over leverage. And we're going to talk about this a little bit more because of course everybody has their opinions on leverage and what you can use it for and how much you should use and all that. But let me ask you something. Why can you open an account for as little as $100? And why do brokers allow you to use this unethically high leverage? Think about it for a second. I'm going to take a sip of my water. I mean, I'd hope by now after that long sip, you can come up with the reasoning here. They don't want you to win. They don't want any of us to win. In fact, they don't care whether we win or lose. All they care about is that we are trading. And I spoke about this a little bit in my previous video talking about the gurus that are introducing brokers, trying to push people to a broker in that situation as well. They just care that you're churning and burning, turning over trades because they're going to make small little pieces of each trade through their spread, and over time that makes them rich. So you need to be aware of their business model here. They understand the statistics. The brokers understand the statistics that 90% of traders are going to blow up in the first 90 days. They absolutely know that. So they think, why not have very low initial deposit requirements? Why not give them leverage? Because if the 1 out of 100 people makes money and we pay that person, fine. But we're going to take everybody else's of the 99%. And that's the mindset that these brokers have. It's not so much even that they don't want you to win, they just don't care if you win. You want to keep in mind that you can grow these accounts if you're focused on percentages, but that's really hard for new traders. The small accounts are where people start when they're focused on the money. But if I could go back in time and just erase all those small accounts that I blew off the jump and have just put all that money into a regulated broker and just grown that slowly over time, I would have saved myself so much time and so much money. I think you also get kind of locked into the mindset that you have to start with a small account and flip it and flip it. That's not realistic. Most people, right, can't do that. And even taking that a step further, most people can't successfully keep the consistency that's required to grow a small account. And that's why I titled this video, Why You Won't Make Money with a Small Account. Because most of you won't. Most of us, I didn't, won't. You have to start, in my opinion, with a sizable chunk of change. But then that goes back to the most important point, that you have to trade with money that you can afford to lose, because large amounts of money will have their drawbacks too. Number one, you can lose it, of course. That's why you don't trade with money you can't afford to lose. But number two, When you see bigger P&L swings, if you're staring at the money, that money's going to make you be emotional. You could react, I know I have, to closing a trade too early because the money takes off. You're up 6, 7, 8 grand, and you close it because you don't even realize. But in reality, that trade still needed to develop. So using a large amount of money is going to have drawbacks too. I'm not saying that the large amount of money is the way. But what I'm saying is this. You need to understand that the amount of money you start with doesn't matter. Any trader that's good, that knows what they're doing, should be able to trade any size account because it's always just about risk reward. It's always about keeping your risk as low as possible versus your potential reward and never putting too much risk on at once. It's that simple. So when people come to me and they say, how much money do I get started with, Austin? How do I start my trading account? Is it 100? Is it 500? Is it 1,000? I always tell everybody, figure out how much you can afford to lose first because I don't